what I'll do is I want to get Manzoor, because he loves talking about tax deductions. Loves it. He's going to talk about basic and in-depth, right? And these are all things we need to know. We all know a little bit about the basic, and the common question we get is what type of things I can claim. And there's just so many things, unfortunately, an accountant just can't tell you because it's really occupational specific. But Manzoor's going to run through, I suppose, some basic stuff, work and property, and then some more in-depth stuff, things that potentially you may not have heard of.
Can I ask a quick question?
Yeah, sure.
About the example you gave before with the gentleman who was expecting to have a lean year in the following year because he was taking 6 months off or whatever, was the fact that he was having a lean year the following year an acceptable reason?
Yes, very good question. Very good question. So I revert that question back the other way, saying that was there a practical reason for you to pay that additional interest? And if the answer is no, then it's more of a Part 4A potentially.
Yes, I
yeah.
understand.
So more of a Part 4A potentially. In that sort of a gentleman's sort of a circumstances, he didn't end up paying much of the interest in advance. There were a couple of practical reasons why he paid it, but the rest of it he hasn't.
Oh.
Yeah. Look, with the deduction side of it is that we look through some of the basic deductions and we look through in-depth deductions, right? So what are the basic deductions? I suppose basic deduction is that, again, as a property investor, we sort of start looking through. We go back into that Excel. So maybe, Jeremy, if we go back to that prior Excel, that would be a good sort of a start. So there are some basic things, right? As a property investor, so we got our rent as our income, and what are the deduction against the rent? So we've got our natural thing, right? So we look through this. This is purely coming in from ATO. So your advertising, if you had to spend in terms of advertising for your tenant, then yes, that is deductible. Body corporate rate, let's say it's a townhouse, villa, or it's a unit as such, you do pay some body corporate. There could be some community fee. Sometimes it could be a house, but it is in a large community that you've got communal fee. So this community fee would be tax deductible. Borrowing expense, Jeremy will touch that later on, so I might just pass that for now. Cleaning expense, as an example, is that if there is a genuine cleaning expense in terms of your investment property, you've got a receipt for it, yeah? So it can't be that, well, I'm Mantrul Khan, I own this property, I just went up there over the weekend and I sort of cleaned it and I want to claim it, $8,000 because I've got a cleaning tender that it was supposed to cost me $1,000, right? So it's genuine, right? It was supposed to cost me $1,000. I spent my own time and I sort of did the cleaning. Can I claim it? The answer is no, right? Because you have spent your own sweat equity, so to speak, or sweat time. So you need to get a valid invoice, right? You need to get a valid invoice. Technically, when you get a valid invoice, because spice cleaning, technically when you get a valid invoice, you're supposed to check the ABN of the supplier as well. Because if the ABN is invalid, and you know, how many people check the ABN? Do I check the ABN of every single invoice I receive? No. But we're supposed to, right? We're supposed to.
We had one story of a poor gentleman, a poor carpenter was getting the subby to do a lot of his work, and we checked the ABN and I said, oh, you've been spending a lot with Bunnings. You spent about 60 grand with Bunnings. And he goes, oh, no, it can't be right. I only buy a little bit of nails, 4B2, and probably one gun here or there. This subby was using ABN of Bunnings. And there was about 40 invoices where he continued to use Bunnings ABN. So it just goes to show that, you know, you've got to be very careful.
Because see, the rule is, from ATO side of it, is that you are responsible. That's from ATO, right? So what that means is that technically speaking, before I pay the invoice, I should be going into the, and how do we check it? You can go into the ABR website, right? abr.gov.au, and you just include the ABN number in there. It gives you all the history, right? And if it's invalid, then technically you are supposed to withhold 46.5% and only pay the balance of it to the subby. And if you haven't done that check, technically speaking, ATO can say, well, you know what, that was your responsibility, right? So, yeah. So use your, I suppose, judgment, right, in the sense that can we sort of check every one of them. So, sorry, going back to it, if I may, just a bit more. So looking through, so we got depreciation. Jeremy will touch about that depreciation as well. Insurance, if you paid the insurance expense, then of course you can claim the insurance. The insurance could be two. So you've got your landlord insurance and you've got your building and maybe even content insurance as well. So any insurance which is directly associated. Yeah. Interest, we spoke about it quite a bit. Line of credit, we spoke about it quite a bit. But the one comment which I want to say is not to mix away your loans, right? So what that means is that you've got a line of credit which is fundamentally being used for buying property on investment number one. And you sort of, well, you do that, right? But then you put a bit of your personal funding in there, in that line of credit, you've taken away a couple of grand, and you bought a portion of that Mercedes with that couple of grand, and a bit of private use, bit of a business use, and so forth. If that is the case, ATO has got the full right to come in and say that they probably will give you still a chance and say, show it to us in a very logical manner with an audit trial that how or what portion of that interest is deductible. Now, the challenge what it happens is that when you mix away your sort of business use as well as the personal use, the challenge what it comes through is that the interest is being calculated on a daily basis. So it becomes virtually impossible when you mix away your private as well as the business. So don't do it. In terms of your land tax that is deductible, land tax is one of those rare tax, which is a tax deductible expense. Your pest control, if you've done it, property agent's fee, naturally is deductible. Repairs and maintenance, as we speak, very carefully, sort of differentiate repairs and maintenance with capital. If you're replacing an existing asset, it's a capital, must be depreciated. And if you have done some work on your existing asset as opposed to replacing it, that's repair. That's deductible. Stationery, telephone and postage, absolutely within reason and within logic. Travel expense have been taken away. And what charges are there? So if we go back, so these are sort of some of the sort of the basic deduction, right? So in your mind, the way you should keep your record is that whenever you're spending, is that you need to go back to that checklist in your mind. Is it being directly related with that particular investment property? Yeah. So we raised a couple of these sort of basic, right? So whether the car is deductible, whether the uniform is deductible, and internet and a study and the tax agent's fee and donations, all of those may be deductible based on your circumstances. Yeah. Fundamental to me is to again go back to what is your profession? What do you do? And very often your deduction is being related on the basis of what do you do, right? That is absolutely fundamental of what do you do. Based on what do you do? I've given an example. The car could be deductible or may not be deductible. If you're sitting in the office all the time, from home to work, work to home, non-deductible, right? But from work, if you're traveling around in different places, because you have to travel around, and provided that you've got substantiation logbook, then your car could be deductible as such. Donation, as an example, you raise donation in here. Not necessarily all donations are deductible. I hear that all the time. Manjul, I send lots of donation to overseas to my parents as well, right? Is it deductible? And the answer is no, unfortunately. I understand donation to the parents, but unfortunately no, right? The donations are only deductible when it is deductible gift recipient entity, yeah? And the definition of the deductible gift recipient entity are the registered entity under the Australian rule, and that needs to be in there. So we as an agent, it is our responsibility to check that. We do that. Tax agent's fee, yes. And again, even the tax agent's fee depends on what work have I done. So if it is more on a revenue nature, that is to do your tax return day to day, so it is deductible. So all of this. I suppose one thing, Jeremy, that the study that you sort of raised and the comment that I want to say is that people say that all the time, oh, I've worked from home all the time. Can I claim my home office expense? And we use that term very loosely, home office expense, right? So home office has been taken away quite a bit. There's no home office, right? The definition of home office, you could genuinely be 2 days a week, right? At 40% of your time, genuinely working from home. You still, and you may be entitled to claim some of the utility bills because you're using the gas and the water and the electricity and so forth, right? So a portion of the utility you can. That is study expense. But if you want to claim the home office expense, which is more, say, you own your principal place of residence, you say, Manjul, this room is absolutely designated. That is what I do. I work in there 2 days a week, and the kids are not allowed on that room, and that is what I do. Still then, it's not a home office. That means still then, you cannot claim a portion of your interest, as an example.
Number of tests you need to meet. You need to have a sign at the front. You need to be open for public access, and it needs to be a separate entry to the house other than your front door. If you don't pass those 3 requirements, you haven't got a genuine home office.
Yeah.
ATO have said it they've just said it very clearly. We're not going to give you a tax benefit for your luxury to stay at home and work rather than going into an office. So it's a bummer because it used to be that way, but unfortunately it has changed quite a bit as they are trying to really clamp down on what we can and what we can't claim.
I suppose some of the in-depth one, if I may, is that some of those we touched it. The overseas investment losses is the one which I want to raise it, yeah? So if we do have any investment in overseas, in our name, my wife's name, under the Australian rule as a tax resident, and definition of tax residence has no bearing to the definition, well, it has some bearing, but it's independent to definition from an immigration point of view. You could still be a non-resident from an immigration point of view, but resident from a tax based on the circumstances. If you are a tax resident, your worldwide income is to be taxed in Australia at the Australian marginal rate. If there is a double tax agreement, let's say, and in most of the countries there are, then you may get credit to any tax that you paid. So a typical example, I was born in Bangladesh. Let's say if I were to have an asset in Bangladesh, which I don't, but if I were to have an asset in Bangladesh, then if it is being rented, I'm supposed to show that as if it is an Australian property. Convert that with the Australian exchange rate and do that. The benefit, though, is that if it's negative, then the ATO allows you as sort of the negative gearing as well, as if it is a pure Australian property. One is to take that into account. I suppose superannuation contribution, the deductibility of it, the forestry managed investment scheme. Now, this is where I've seen people do crazy things. I've seen, people buying emus to claim them as tax deduction. I've seen people buying cows to claim them in tax deduction. And
these really are legitimate schemes that people have put together. It's crazy.
And this is an example whether the common sense and the logic sort of prevail, right? To remember the very basic common sense that if I'm sort of spending $1, I'm only getting the tax benefit out of it at my marginal rate. So if my marginal rate is 32.5%, if I'm spending $100, I'll get 32.5%, assuming that I meet all the condition of sort of being it's deductible, right? But I'm still getting only 32.5%. Did I need to spend that $100 in the first place? Is the question that I ask.